Welcome to Property Showcase, the podcast that brings you closer to the service providers that can inform your decisions about how you buy, manage and research top investment opportunities. Be informed and become a better investor with Property Showcase.
Our first guest on the show today is Simon Pressley. Simon is a regular guest on the show and is the head of research at Propertyology. How's it, Simon? How are you, mate? And thanks for joining us on the show today.
Good to be back again, Tim.
Now, we were chatting a little bit off air and you were saying that something isn't exactly adding up in the current vacancy rates situation around the country. Been a flood of new stock coming in particular around Sydney and Melbourne, but not necessarily translating into significant increases in vacancy rates as you might have expected them to. Be keen to get your view on why that is, Simon.
Yeah, look, we know it's history now. Sydney and Melbourne have had really strong property markets, but it was really the investors that drove those markets for 4 to 5 years. And look, there was, 2 to 3 times the number of transactions, properties bought by investors over that period of time to what we normally see. So as that's been washing through the system, we've been having a close look at vacancy rates and expecting them to go up and rents to soften. It hasn't done that, but it's not just unique to Sydney and Melbourne, Tim. Hobart, for example, where Propertyology bought dozens and dozens of properties in 2014 through to 2016, there's an all-time capital city low of vacancy rates there. There's actually a housing crisis in Hobart with vacancy rates are now down to about 0.3%, people living in tents, believe it or not. And throughout each day when we're researching markets all over Australia, we've noticed a number of regional locations that have much tighter vacancy rates than what we'd expect at this stage of their cycle. So we saw the common theme was tourism destinations. And so that caused us to do a study, and we feel that the Air Bnb effect is having a significant impact on Australia's rents.
It certainly is the sort of the latest trend that's coming in. What kind of things are you seeing around that space there, Simon?
Well, Airbnb it's a disruptive business model. I say that not as a criticism, I think it's a good thing, but it's a different way of people renting short-term accommodations. So whether that's someone looking to go for a holiday for 2 nights to 2 weeks, or whether that's someone travelling for business purposes, while some will always stay in the traditional hotel, others are now electing to stay in more of a house or a cheaper apartment than a luxury hotel. And so what we're seeing is right throughout the country, not just capital cities, tourism-related locations, vacancy rates from, say, 2 years ago to today are significantly lower. And it's absolutely no coincidence at all that Airbnb has really become in vogue in Australia in the last couple of years.
And as you say, become in vogue, and more people are taking advantage of it or utilising it, and predominantly in that tourism space. But it is having an impact, isn't it, on long-term rentals or 6-month, year-long rentals, and then the renewal of those.
Absolutely it is. I mean, Airbnb, we've tried to get some data out of them, but they're very secretive about it. We've got some broad numbers out of them, but they say that in Australia there's about 120,000 properties now available via Airbnb. I mean, that's a massive number of dwellings. That's increased by 40% over the last 12 months. And they say that about 5 million Australians are currently using Airbnb. So we're talking about a quarter of our population that are using Airbnb. But, Hobart is a classic example of how Airbnb is having an effect tightening rents. Now, we've had our own clients who we helped invest in Hobart, say 2-3 years ago, reach out to us in the last couple of months and say their rent has increased by 25% in 12 months. But people have said to us that when we bought a property for them and paid, for example, $350,000, and it might have been renting for about $360 a week, over the last 12 months that's gone up to around $450 a week. So the big winners from the Airbnb effect include property investors in certain markets where vacancy rates have tightened, and that either has already had an effect on their rents going up or may have that effect in the future. But it's also, I think, a big success for Australia's economy, the Airbnb effect. What it's doing is locations around Australia, especially parts of regional Australia, are now more accessible to people. They've got greater options when they're looking for accommodation to travel to these places. So, and without the Airbnb effect, a lot of people wouldn't probably otherwise go there. So I think it's a good thing, but the long-term tenants, the residents of these locations, in some cases, are finding harder to get accommodation.
I mean, that certainly it is opening up different regions, and it's good for the economy. Anything to watch out for, do you think, Simon, with Airbnb?
Look, it is something to. No investor should jump in and pick a location or pick an individual property because of the Airbnb potential. But it's just, in this ever-changing world, it's an extra piece of information for property investors to be mindful of. From a tenant's point of view, it's probably not a good thing because it means more properties that would previously be part of the broader rental pool are now being set aside. Landlords are choosing to set them aside for more short-term accommodation. So that's not a good thing for the tenant, but it is a good thing for the property investor. Tightening vacancy rates is always a good thing for a property investor.
Hey, thanks, Simon. Always a pleasure to get your insights. Now, if anyone wants to learn more about Propertyology and anything that we've talked about today, how can they find you?
Look, our website's full of research reports, www.propertyology.com.au, or give our award-winning buyers agents a call on 1300 65 40 70. Find out where that next Hobart is. Remember, Propertyology was the only buyers agent in Australia to pick that market, and we feel we're actively investing in a couple of the next Hobarts right now.
Fantastic, Simon. Thanks very much.
My pleasure.
So our second guest today is Adam Rigby. Adam is the CEO at Upside Realty. Hello, Adam, and how are you, and welcome to the show.
I'm great. Thanks very much for having me.
Thanks for joining us. So the year is properly underway now, and a couple of market forces have started to move around a little bit, and that's affecting investors who will be keeping an eye on those forces. So I'd be pretty keen to get your view, Adam, on why most people sell their investment properties.
Well, I think it just comes down to a couple of things. One, their circumstances have changed often. Life moves around for all of us. So sometimes, you might need the cash that's been tied up with the property. Obviously, property is a fairly illiquid investment compared to things like shares and other things. Obviously, with capital gains tax and I guess the uncertainty that's happening in government discussion right now around tax, might be prompting people to think about this as well, which is obviously a concern. And I think the other thing that certain markets obviously aren't appreciating in ways they might have in the past, or to the expectation of an investor. So that might also trigger a change in strategy or thoughts.
I guess a lot of investors, I guess it all comes down to cash flow and managing cash flow. And a lot of investors would be asking themselves a question, can I afford to keep my property? What are your thoughts on that? What sort of considerations do they need to take into account?
Yeah, absolutely. I think, cash flows, obviously, if you don't have cash reserves, that definitely puts a lot of pressure on the cash flow situation. So, if your circumstances have changed, or you don't have cash reserves or easy access to cash, that's absolutely going to drive a change. And I think you don't want to be I guess under that sort of cash pressure to hang on to an investment if that's the case. But obviously, certainly making sure that are you in fact getting the maximum yield from your property, and it is obviously being rented out is absolutely core, and making sure you're priced it to maximise that tenancy is very important. And constantly reviewing the circumstances and the market is also an important thing to be doing. And
I guess, you're talking about pressure there, and I like the way that you put that. And I mean, I suppose as an investor, you would know when you're under pressure, because that sort of that cash noose would start to sort of tighten around your neck. But when you're doing that review, you probably want to be looking at if there were other opportunities. So you might be in an investment property, sell out of it, but look for another opportunity. Do better investment opportunities exist?
Yeah, look, I think it's definitely worth looking at, and there are moves in markets at different times. So, obviously one market can be hot and another market can be colder. I mean, we've seen an interesting phenomenon happen over the last 12 to 24 months where the liquidity in the Melbourne market was higher than Sydney. So there was more volume of sales happening, even though there's less population, more volume of sales happening in Victoria, and the price was moving faster. So these things do happen in pockets. So, depending on how active you want to be, and depending obviously on if it makes sense financially to change where you're invested, it is something that it is worth keeping your eyes open, because markets absolutely move in different cycles from one another, even within Australia.
I mean, we talk about that, don't we? And people sometimes make that error about talking about the Australian property market, but it's not an Australian property market. There are different markets within the markets, and they all react differently to different stimuli.
Yeah, absolutely. And I think, and it's one of those things that you can't predict. You can monitor, and you can, like all investments, if we could predict them, we'd be all very, very rich people. But, I think being aware and not and actually just keeping yourself educated as to what's going on, you just feel a bit more in control. And I do think that, obviously property is a bit of a complex investment, because the liquidity and the transaction costs are quite high. It makes it, harder to respond as quickly. But I think if you still need to look at it as a long-term play, definitely. But I think with the movement in markets, you can still take that more active role, but your time scale is obviously different.
Thanks, Adam. Now, it's true that there's a lot of moving parts to this. And if anyone wants to learn more about Upside Realty and anything that we've chatted about today, how can they find you?
Yeah, look, I think the one thing that will be of interest to investors is the fact that we are a flat price real estate agency that uses, I guess, technology to really make the process a lot smoother and save the vendors significant money in the transaction costs, which as an investor, that does free you up to be a bit more liquid. We are upside.com.au, or you can just give us a call, 1-800 877 433.
Thank you, Adam. Thanks for coming on the show. Really good to chat to you today.
Great chatting with you too.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs, and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.